I'm Kerry Knoll. I'm the executive chairman of Generation Mining. As Gwen mentioned, we're in the PGM space. You've been hearing a lot about gold. PGMs are, of course, among the precious metals, but more recently, in more recent decade or so, they've become much more an industrial metal as well as a precious metal at the same time. So if we advance to the next slide and then the next one. So we are a pure play PGM developer. We do have some copper, but we are focused on developing a PGM property in Ontario. We own a 51% interest in this project, and we have an option to increase that to, it's called Marathon Palladium Project. And an independent resource calculation done last year had the M&I resource palladium equivalent of 8.6 million ounces. With another small inferred of another 900,000 ounces. We're well-located infrastructure. We're right on the Trans-Canada Highway. We're right on the CPR main line. We've got the new big power line going across Ontario is going right over our property, and we're just outside the mining town of Marathon, which is the town that supports the Hemlo gold mines. We've had the property just over a year, about 13 months now. And in that time, we've completed a preliminary economic analysis, 3 resource evaluations on the 3 deposits, and we're just about to start a definitive feasibility study in the next few weeks. We've got $15 million in cash. We're totally financed for everything we're planning currently, and we're still putting together the full team to do the feasibility study, but that's all imminent. Next slide. So this is the breakdown of the metals we have. Obviously, palladium is our big one, but we do have a significant platinum credit, and we've got 1 billion pounds of copper as well. So, and I'll talk a little bit later about what palladium is and why palladium, I think, is a metal who you really have to have a look at if you're investing in the mining space. Next one. I won't get into all the different people we have. We do have a good team. A little bit about myself. I've been 35 years in the mining business. I've started 6 mining companies. Of the 6, 4 of them have gotten into production, and the other 2 were taken over before production. Of the ones that got into production, more than two of the 4 wound up with market caps in excess of $1 billion. And just point out a couple of other people on this slide. Drew Anwell is a recent hire. He is our Chief Operating Officer. He was one of the key players building and operating Detour Lake. He was 8 years. And so he's got not only extensive open pit experience, but he's got it in Ontario. So he's dealt with the Ontario government, with the Ontario Native groups. A lot of deep experience there. Brian Jennings has joined us as CFO, and he was a very senior guy at Ernst & Young. And I won't get into the entire team. Jamie Levy and I have been working together for 7 years or 8 years now. Jamie and I had previous company was called Pine Point Mining, which was acquired by Osisko in 2018. This was a spin out from that. Next slide. And again, I'll just point out a couple of the directors. Paul Murphy on the bottom, on the left column, he's chairman of Alamos. He was chief financial officer of Alamos or of Guyana Gold for 8 years, and he was former head of mining for PricewaterhouseCoopers. So pretty senior position. Most recent director to join us is Cashel Meager. He's the senior vice president, chief operating officer of Hudbay. He's a part of our technical team, as is Phil Walford below. Phil, you might know through Marathon Gold. He ran that company for 10 years. And before that, he ran Marathon PGM, which was the owner of this project that we have. So we've got some really long-term. Phil has been associated with this project since 1993. So we've got some really deep experience there. Moving on. So where we are, right on the North Shore, about 8 kilometers from Lake Superior. We're not far from the Hemlo mine. As you can see, there's mines all over around Lake Superior. I'd like to point out at the bottom there, the Lundin Eagle mine, which is in very similar geology to us. And North American, on the top there, top left, the North American Palladium mine, which was taken over $1 billion by Impala at the end of last year. Next slide. So this is our property. It's about 220 square kilometers. There's 3 known deposits on the property. The Marathon deposit is the main one, and that was the subject of our PEA. We've also got a deposit in the Sally deposit, and I want to point out the Sally deposit in the top left there because I'll be talking about it a little bit later. But as far as infrastructure goes, I think I mentioned we've got rail, we've got an airport right literally on the property. We've got the Trans-Canada Highway. We've got the major east-west link power line, 200-volt power line going right through our property. Previous owners of this project always had a power problem. There wasn't enough local power they were going to have to generate. We won't have to do that. The other thing is that Hemlo is winding down, and Marathon as a town has lost about 40% of its population, and they are dying to see this project go ahead. So we've got very, very strong support from the local town. We've got a good working relationship with the natives. The previous owners of this maintain a good relationship, and we've inherited that work. So that's really, really helpful for us. Next. So just talk a little bit about our PEA. That was finished in January, and it included a new resource evaluations on all 3 deposits. Looking at about a third of the mineralization, so a third of the resource on the property, we've got a 14-year mine life, averaging 194,000 palladium equivalent ounces per year. And the CapEx is Canadian dollars, $431 million. At the time we did the study, the 2-year trailing average price for palladium was $12.75. Obviously, it's a lot higher than that now, but just at the $12.75, we got an internal rate of return of 30% and a net present value of $71 million. And I'll tell you, it's not that often that you see a project where the net present value is double the capex, and that kind of is to me a rule of thumb that you want to have when you're going into building a mine, because a lot can go wrong when you're building a mine, but that gives you a big cushion. If you look at the palladium price at the time we released this in January, which was slightly higher than it is today, we had an internal rate of return of 45% and a net present value of $1.5 billion. So a very, very robust project. We can make operating costs, we can make palladium at $504 an ounce, and the all-in sustaining cost of under $600 an ounce. So at any foreseeable palladium price, I think we're going to be good to go. Next. That's what the deposit looks like. Talking about simple, it's about as simple as they get. This is the main zone where the vast majority of our ounces are, probably about 80, a little over 80%. And this is where the PEA is entirely focused on this deposit. You can see the jagged line around it. That's the pit outline. We've got a very low strip ratio, about 3-to-1. And all of the metallurgy's been done on this property. I failed to mention earlier that this property has had 2 feasibility studies done. One in 2010, and that was based on a $320 palladium price. And believe it or not, said it was economic then. Then in 2014, at a price of $530 an ounce, another one was done. So we've got all of that work. We've got all that metallurgical testing. We've got all that mine design. We've got tailings design. We've got all of that work as our starting place. We're changing things. We're making it smaller. We're making it trying to mine some higher palladium. Previous studies were based more on copper because copper was higher and palladium was lower. We're kind of changing that focus. So we are doing some things differently in our feasibility study, and we did some things differently in our PEA. Moving on to the next, please. I'm going to talk just for a second about palladium. It's obviously moved up big time. It's mainly now used in autocatalysts. So whereas 97% of the gold that's ever been mined is still around, virtually all of the palladium that is available in the world is in a car somewhere. There is almost no stockpiles left. If you can go on to the next slide, I believe I'm running out of time. This kind of tells it all. Since 2012, the world has been in a deficit of palladium, and that deficit was made up by surface stockpiles which have been exhausted, which led to the run up to almost $3,000 an ounce in January of this year. Of course, with car production stopping around the world, palladium has gotten weak, but the deficit will continue. And when the car manufacturers get back operating, the shortage is going to continue. Just two more slides. Go ahead. Let me just, I'm going to go to the next one. So this is how we compare. We're trading at $5 an ounce in the ground. This is how we compare with other palladium companies. The previous slide, which is on our website, shows how we compare to gold companies, which are around $70 an ounce. Next slide. And this is how we compare with Platinum Group Metals, which is also a very good company, but some differences between us. They're underground, we're open pit. And then I'm going to leave you with one more thing. Just go ahead to the next next slide, please. This is a rock that was found on the property in 2016, and it's a different type of mineralization than is in our deposits. It's a massive sulfide. It's 188 grams of PGMs and 9% copper. We're trying to find out where that came from. We did a big seismic survey last year. If you can go to the next slide. Over where we found that rock was found by those drill holes on the top. And we found this big velocity anomaly at about 1,000 meters down. We're going to do some more geophysics on that and possibly some other work. And then we're probably going to be testing that by drilling. And then I'll finish up with the next slide is our shares outstanding. We've got 130 million outstanding for a $45 million market cap, enterprise value of about 30 million because of the 15 million cash we've got in the bank, and we've got a pretty good shareholders list, similar to some of the other ones I've seen out here. But Lucas Lundin, Eric Sprott, Osisko Mining, and by the way, they all paid at or higher prices than our shares are right now. And Sibanye Stillwater is also one of our largest shareholders, and they're the largest platinum and second largest palladium producer in the world.